Hey everyone, Paulus here. We love the word KPIs, right? But I want to show you today what you should be focusing on when related to KPIs. There's some foundational KPIs that apply to every business at every stage. That's really what I want to deep dive in today. Every business owner knows that you need to track KPIs. What gets measured gets managed, right? But then the question is raised, okay, which KPIs should we be tracking? How many should we track? How should we track them? In this video, I'm going to share my thoughts about KPIs and which ones are worth keeping track of. Okay, let's go ahead and get started. Okay, so I'm from the accounting world, and in some ways this actually set me up for failure, and I'll explain what I mean. So in the accounting world, we talk a lot about lagging measures, meaning things that happen after we already did the work. Right? So for instance, revenue. Revenue is tracked after you collected the revenue, right? Expenses are tracked after you've done the expense. And so in accounting, we got to where we were really reactive to the data. And it's like our job is to historically track it and then make decisions on the data and then determine what we need to do based on what already happened a month ago, a year ago. I mean, if you didn't do your books for 6 months and you do it, like you're 6 months in before you really know what decisions to do. So obviously keep your books tight monthly, keep an eye on it, but even then you're a month out. And I'm always about like, how can you decrease your gap days? So if something's super important, how do you truncate it to where you can track it faster? And so a big game changer for me was when I read the book, 4 Disciplines of Execution. And that book, like, it's not an easy read, but it like deep dove into lead and lag measures. And it really taught me how to set goals. You know, you think all through your younger years you're taught set goals, but nobody really taught you how to set goals and how to really move the needle in your company. And so when you really understand, okay, these are the lagging measures, you know, revenue, profit, expenses, things like that, anything that's measured after the fact, but leading indicators can actually directly influence your revenue, directly influence the amount of cash you have, directly influence the amount of profit you have. So in a way, leading indicators almost needs to be our focus, and then the lagging indicators is just like, hey, did we achieve the objective and the goal or not, right? It's more of the measurement to see if we did the job. If the leading indicators are supposed to be a lever that directly moves the needle of the lagging indicator, then we need to really hyper-focus on leading indicators, right? At the very end of this video, I'll talk about an important leading indicator KPI just to get your brain going in that. But the lagging indicators are obviously still important, and I want to teach you those. So I'm going to talk about just a couple foundational lagging indicator KPIs that are really foundational that you'd be surprised at how many business owners don't understand what they are. And so I just want to talk about those so we make sure we understand them. And at the end of the video, I'll go into a leading indicator, get your brain thinking that way. Okay, first let me answer this question. How many KPIs do you need? Well, a person, like an employee, should probably have 1 to 3 KPIs max that they are like really accountable for, like on a big scale. As a company, I think it really depends on what phase of business you're in and what is, like if you have tight cash flow, you need to be monitoring that cash flow potentially daily if it's that tight, right? It really depends on what's urgent and important in your company and really making sure those are dialed in. So we talk a lot about revenue, right? I made $1 million, I made $2 million, but many of us don't talk a lot about gross profit or gross margin. And some of you might be like, I don't even know what that is. And so if I said net income or net profit, like you probably understand what that is, but if I say gross margin or gross profit, a lot of you are like, what is that? All it is simply is just revenue minus your cost of goods sold. So what it takes to deliver, to get your product out, like what are the costs for your product and to fulfill on that product, you know, everything directly associated with that product. And then so your revenue minus your cost of goods sold is your gross profit number. When you're first starting to launch a product, if you can really look at your gross profit number, you're gonna know, am I charging enough for my product? Because a lot of times if you're looking at your gross profit margins, you're gonna know if you're charging enough to cover all your overhead costs, which are a lot of times more fixed costs. So if you wanna put it into a percentage formula, that's what gross margin is. And really it's just your revenue minus your cost of goods sold divided by your revenue. So this is a great ratio to determine how well your business is producing revenue in relation to managing their production costs. So again, just a great way to understand, am I charging enough for my product or service? So just really important to make sure when you're doing your financials a lot of people just put it all below the line as expenses. Put the things directly associated with your product above the line. You can just Google kind of what should be in cost of goods sold to kind of help you. I won't go into the details of this video. So another great foundational KPI is net profit or net profit margin. And that literally is your revenue minus all of your expenses, which includes cost of goods sold. So all of your expenses, and that's kind of your bottom line of your whole income statement or profit and loss statement. If you can go on accrual basis of accounting, where really when you earn your revenue, it's tracked when you accrue your expenses. Like that's what accrual is. It's like it matches the timing of your revenue expenses. On cash basis, whenever you got the revenue in and whenever you paid the money out, that's when that's what cash basis is. But that can be tough if the timing of that is really off. You're the company where the timing is neck and neck, like it's not as critical to be on accrual. But if you can get a profit and loss statement on accrual basis and really know, like, am I profitable as a company? It's super critical to know if your overhead costs are too high, if you're too bloated there in relation to the amount of volume you have in your revenue. And if you want to put that into an actual percentage, again, for a net profit margin, you could take your net income number and divide it by your revenue. What that's really going to tell you is for every dollar that you earn, how much of it are you keeping on the bottom line? And so that's just kind of another important foundational KPI that applies for everybody, no matter the phase of business that you're in. So the last KPI I want to talk about before we go into the leading indicators, I'm not going to go into a ton of detail on because it's super complex, that I would suggest hiring kind of an accountant or having somebody help you with it, but it's probably the most critical one to have. So that's why I just want to preface that. And it really is related to your cash flow. And there's different ways to do it. Like you create actual different KPI formulas around it, or even just a projection, a spreadsheet. So if you want to just keep it really rudimentary right now and just project the months and what you project the expenses are and your revenue and what your cash flow is, your beginning cash flow, and after your different expenses, and your revenue you anticipate bringing in, what's your remaining cash flow after that month, and just project it through each month, carry the bottom number to the top of the next month, and just carry a spreadsheet across. What that's going to do is really say, oh, we only have 3 months of cash based on our current situation. So then you can determine if you need to bring out any outside money in, if you need to change up your expenses, get rid of expenses. But I see this again with a lot of entrepreneurs where they're literally bleeding by the time they come to us, and then we have nothing to work with because they waited too long to make adjustments. If I had to go back in time with my company, that would be the biggest thing, is pivoting quicker. Sometimes we want to hold on because we're like, oh, it's going to change. But sometimes if we can pivot quicker, it's the difference between saving our company and it going under. So I love to give free content and free value like this. If you want to continue to see more videos like this, I would love it if you like and subscribe. This is what gets more people viewing. My channel allows me to reach a bigger audience. All my money is made on my done for you company. So I'm all about creating free content, giving you the tools, the things that I've learned and the resources so that you can just take it and kind of run with it and really create the sustainable company that you desire for you. So again, I would love it if you like and subscribed to this video. Okay, so now let's go ahead and dig into the leading indicators and what that means. So a great example of a leading indicator is around like customer satisfaction. And there's different ways to monitor customer satisfaction, but if you're able to track them timely, they can feed things back to you so that when eventually you get to your revenue number a month later, you're like, wow, revenue's down, but maybe it was because our customers weren't happy, or there's bad press because they're going telling people a bunch of bad stuff about us. We want to stay ahead of the game on a lot of these leading indicator KPIs. So let's just dig into customer satisfaction in a few ways that you could track these as leading indicators. So a really popular one you might have heard of is what's called a Net Promoter Score. In essence, it's how likely is a customer likely to refer somebody to you. And it's usually on a scale of like 0 to 10, and 1 to 6 is actually potentially could be bad press for you. 7 to 8, if people say a 7 or 8, those are usually like the indifferent people that won't usually say good or bad stuff about you. And then the 9 to 10 people, the people that are gonna be your raving fans, are gonna tell people about you. So if you're getting a lot of 1 to 6s or a lot of 9 and 10s, it's gonna let you can take an average of all of them and really determine where are we on average, because that's gonna help us determine if we're on or off the right track of providing value to our customers. Okay, the second one is called the customer effort score. And it's just really how easy or hard was it for a customer to complete a certain task. or how great was their experience on something. And so usually you can choose different ranges, say from 1 to 5, from 1 to 7, how was your experience with this? Or how hard was it for you to do this thing? Or how hard was it for you to log into this portal and do this? And so those are great ways to know if you just launched a portal, like thinking of this now, we just launched a portal, we should probably do something like this where, hey, how easy was it for you to log into the portal and find this information? Because right now we're assuming people like it, but we don't know if we don't track that measurement. Okay, another kind of customer satisfaction lead measure is what's called a CSAT score. So in our ticket system, we have like a smiley face, line face, where it's like I'm indifferent, or a frowny face, and it's a really simple way for the customer to choose I'm happy, I'm not happy. So it's kind of tied to like tickets or different things where you can kind of see, okay, for this thing, how satisfied was I with the result of why I came here? And so these are great ways to kind of measure the satisfaction of your customer. So kind of a big practical use case for this is our hyper focus on in our company is always having like one big domino goal as an overarching company that we're focused on, and then each department comes up with their own big domino goal that supports the overarching company goal. So I'm part of the special ops team, and it's kind of my incubator team that I can experiment and have fun, and I'm not worried about the whirlwind of the whole company. And so a lot of the things that are in my vision and my brain I can help with, it still needs to support the overarching goal of the company. And so in this case, like we have a goal to have 200 show up appointments in the month of September for a book a call funnel that we have for marketing. And so because like I love marketing and my right-hand girl is like my version of an executive assistant loves marketing too, we're able to brainstorm ways, like what are the leading indicators we could do that will directly influence the show up rate that we have? Are we nurturing our email list well enough? Can we optimize our funnel more? Like there's so many different things we can do to directly influence our lagging indicator, KPI, of the number of show ups that we have. And so just really cool things like that, like just have fun with it and keep it simple first. Start with the big goal, and then you can start to figure out what are the KPIs we should track based on the big goal that we have for our company. If you want to learn more about what you should do when in your company, like what KPIs you should do at different times, I'm putting on a free 5-day event. It's actually around time and around really leveraging your time. So you can kind of start to think about KPIs in the framework of your time. How can I use KPIs to leverage my time more and to keep track of the ROI and the success rate of what I'm doing? And so if you want to really dig into this event, it's a 5-day free event. It's pre-recorded, so you can really self-pace it, and also you can fit it in with your everyday life, because I'm going to try to keep each day fairly short. You can actually go to mastermindmytime.com, and I'll put the link in the description. Again, it'll be a free 5-day VIP event really around leveraging time. Life isn't about like managing time. The most successful businesses are ones that have learned to really leverage their time. And by doing that, that's why KPIs are so important, right? Because we can keep a pulse on things as we start to let go of the reins a little more as our company grows. So again, you can go to mastermindmytime.com.